The crisis of 2020 has yet to be seen. Despite how bad the economy is already, it's only a fraction of the impact of how bad the excesses of debt will put on top of the system. Debt magnifies wealth. Someone can buy a home for 20% or less of what they are actually able to afford. They can finance their car. Businesses can issue debt for investors to buy. Governments can print seemingly infinite amounts of fiat garbage currency, and investors will buy their fake IOUs, promising to pay them back a century later. All of this works wonderfully until it all falls apart. You came here for the truth, so let me unveil that for you. I've got a mega jam-packed episode. We are going to talk about what's really going on. I'm going to unload so much information in this one. I'm hoping to squeeze it into one video, we'll see. But I'm going to start by talking about the bankruptcies, the loan loss provisions, and what's been happening here on the economy. You always see the attention to the stock market, Is Moderna doing this? Is Pfizer doing that? And they're trying to focus on these data points, of course, because it helps to push the market up and helps to enrich the globalist elite. They don't want to tell you about what's really happening beneath the scenes. And I know that based on the video I did yesterday and so many of my others, fewer and fewer people are interested in the truth, but I'm glad you're here. Let's begin. Out of the Wall Street Journal, this is not a normal recession. Banks ready for a wave of defaults. JP Morgan, Citigroup, Wells Fargo stockpile $28 billion to cover potential loan losses. This is massive. This is historic. They know exactly what's coming around. And I keep hearing about the V-shaped recovery. I keep hearing about how the economy is actually doing well, how there is growth, how we are getting back onto where we were before. And then you look at what the banks are doing behind the scenes. While they tell you one thing, they're doing something completely different. And it is the reality. And that is the worst is yet to come. That isn't me saying that. It's directly from this article. The largest US banks signaled that the worst of the recession is yet to come, opting to stow away tens of billions of dollars to prepare for an expected wave of loan losses. Remember, expected. They see it coming. They know exactly what's happening here, and they're putting money aside. They haven't put enough money aside, despite what Jamie Dimon has said. They are never ready, but at least we have this acknowledgement that something very bad is coming. They have already witnessed problems in the financial system. We have seen it. It has been very clear. We have only scratched the surface, I assure you. The banks stockpiled $28 billion to cover losses as consumers and businesses start to default on their loans. This is the big news here, because as all of these businesses start shutting down, which I'll show you some examples in just a second, as these people cannot afford to pay their bills, what are they going to do? They're going to claim bankruptcy. And I've talked about this on numerous occasions. People want to focus on that one particular institution that's got the problem, on that one individual who can't pay their bills. But this is so much deeper. When you look at it, it is very clear to me. You start to see the ripple effect. It isn't just one person, it isn't just one business, but it starts to have an impact. If you have the price of oil, for instance, that is down for a period of time, that doesn't just affect the companies, that doesn't just affect the people that work for those companies. You have real estate that's in the area, that you have that business that's in that area, and you have every other business that will be impacted by a weakened economy. And of course, this has such a dramatic effect that cannot be seen if you're simply looking at one thing. You've got to expand. You've got to do what I call zooming out. The provisions amount to a sharp increase above what they put away in the first 3 months of the year, reflecting a shift in their assumptions about the length and severity of the economic toll. JP Morgan, the largest US bank by assets, said it put aside extra to prepare for unemployment rate that remains at double digits well into next year. Slower GDP growth obviously being front and center right now. They are not going to disclose this as being part, while they do mention this, they're not going to simply put this on the front page of the news newspaper. They don't want people to get freaked out. They say, we're preparing for the worst, so you've got nothing to worry about. But of course, every single time, the stress tests, everything that they do, whether it's coming from the central bank, whether it's coming from the banks, they just want to make it seem like they're doing a whole bunch of different activities to prepare so that they don't get in trouble when they need a bailout. You see, that's what this is all about. This is not a normal recession, according to James Demon. I guess in this case here, he's not Jamie anymore. The recessionary part of this you're going to see down the road. That right there is the big news. This needs to be on the cover of every newspaper, but it's not. This is so key to understand because you have a problem that faces you right away, one that smacks you in the face, one that was clearly evident in March. But today, we are right in the middle. The worst is still down the road, and that right there is so key to understand. Heading into the current collapse, Americans had taken on record amounts of auto loans, credit card debt, and student loans. Corporate debt also reached record levels. Everything had been increasing leading into this, and that presents a problem for those people, for the businesses, for the banks, and everybody in between. But they're not going to tell you about how bad it is. They just say, we're preparing, we're all good. But watch how this really unfolds, and there is no amount of money that they are able to print to fix it all. Corporate debt is a big issue. You also have the commercial mortgage-backed securities. That's another one. Look for the BBB rated debt. This is so key to understand. That's why the Federal Reserve came in and they are buying that corporate debt because they know that as these get downgraded, that they need to be there to catch it. It is very clear that without the Federal Reserve being there buying anything and everything, going way beyond their mandate, doing things that are completely illegal, the markets would have seen what the economy is already dealing with. Here you can see the chart that just shows you the loan loss provisions, JP Morgan, Wells Fargo, and Citi. It is quite frankly historic. We have seen it right here on this chart. I want to know what's going to happen in the coming months. I think this is going to be absolutely massive. Speaking of the banks stand to make $18 billion in the PPP processing fees from the CARES Act. I mean, that is just fantastic. They were able to help people out and make $18 billion at the same time. Isn't it just a little bit interesting that they happen to profit a considerable sum in such a short period, while the majority of people are still screwed over? Well. Now, I don't know what's going on behind the scenes. I do think that they should be rewarded simply because all of their activities are a burden on their people. If you're running money through their systems, if they have to spend money, surely those costs need to be covered. But is $18 billion really reasonable? I have no idea what the real number should be, but that seems incredibly unrealistic. Most of the processes that run in these financial corporations are done at night. They are done using these systematic processes that are largely done completely automatically. There is no human involvement, but that's besides the point. I'm just trying to highlight the fact that the big winners here are the financial establishments. Executives at bankrupt companies scored $131 million in bonuses. That's huge, and it is really just the beginning because there are many more companies that will go bankrupt here. And this happens to ring a bell from what we saw during the financial crisis when we had all of these different companies laying off so many people. The stock market was destroyed. Then the bailouts came and you saw all of the waste. The CEOs were getting these massive bonuses. You saw these purchases that they were able to make. If I remember correctly, they started to remodel different buildings. Money was being spent everywhere on your tax money. This shouldn't surprise anybody because this is what they do every single time. But people want to yell and chant and cheer and say everything is being done, but they just don't understand because they're ignorant. They do not understand. They do not have the knowledge, and unfortunately, they have to deal with the consequences. This is an article out of the AP and it is quite lengthy, and you could just go through if you want to check out these different examples of all of the different corporations, companies, small businesses that have been dealing with their problems as they've tried to reopen, they had to close back down. This gives you examples from all over the world, in fact, and you could see real life problems that are going on today as a result of the closures, as a result of the weakened economy, as a result of having no customers, how they've been dealing with it all. This one is definitely worth checking out. This is an article out of the Wall Street Journal, and it gets into some good details. It's specifically highlighting this one small business that started to grow over the years, and now that's really had an impact on the business growth. They're going to be shutting down locations and so on. Talking about 24 sites that they've been able to open since 2006. Now the company is moving fast in another direction into bankruptcy. This is quite unfortunate for so many people that are involved here, the debt that's involved in this. Look, as I mentioned during the introduction, a lot of these businesses, a lot of these people, a lot of what you see is built upon debt. How do people buy homes? Do they have 100% of the cash on hand? I would say almost 99.9% of the cases, they don't have that. They've got 20% if you're lucky. The rest of that 80% in there, that's financed with debt. So depending on what the current interest rates are, maybe you're borrowing at 4%, let's say. The intention, the hope is that over whatever, 10 years, 20 years, 30 years, you're going to be able to pay that back. But suddenly, if something is disrupted, because remember, you've got revenue coming in that's paying off the debt. Suddenly you don't have the revenue, you've got a big problem. That's what's happening today for so many people and businesses. I'm not going to get into all the details here, but essentially he said, I'm not going to open the restaurant at half revenue. I'm going to walk away from those restaurants. I'm not going to set myself up for failure. He's putting these businesses into bankruptcy. He's cutting his liabilities right here, $500,000, trying to keep these certain restaurants in business, restructure the debts, renegotiate deals, trying to keep it going, trying to make it happen. But it's difficult. And certainly the bigger you get as a small business, you're not getting those advantages that somebody like these major financial establishments or Apple or Amazon. They don't have lobbyists inside of the government. This isn't the revolving doors. None of that. You don't get those advantages. And unfortunately, so many people lose out. A little bit of humor here. US units of Chinese companies got bailout money designed to help businesses hurt by what we're seeing here, 2020. PPP loans included up to $10 million for Continental Aerospace Technologies run by a Chinese defense giant. I'm sure this is not the only example, but this is what we see every single time. That which we see on the surface is nothing like what's going on behind the scenes. Scratch that August trip to Hawaii. The state just extended its quarantine until September 1st. This is happening all over the world. In fact, the closures that were starting to reverse are now going back in the other direction. This is going to have an impact on the economy. There's no way around it. Forget about that overseas holiday. Qantas cancels all international flights until March of next year. This is very big. I'm sure they're not the only one that's going to be doing the exact same thing. This is the problem for the airline, for the manufacturer of all of the different airplanes, for the businesses, for everything. It's going to be a major issue for the foreseeable future. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. You can check me out on Instagram and Twitter at The Money GPS. New stuff coming every day. Check me out. If you want to learn how to sell stuff on Amazon, I've got the free e-course that you need to see because a lot of people are charging $1,000 plus. My course is quite in-depth and it's free. So definitely join one of the 7,500 others at theamazongps.com. If you want to know what's going on in the financial system from top to bottom, A to Z, we're talking about the foundation, the history, the asset classes, how to make money, everything in between, you could do so at the link in the description. If you want the audiobook, themoneygps.com. Wait a second, don't go anywhere. You've got to see this video. Very important, a lot of data in here. Definitely want to watch it. Click it. See you there.